Hello everybody, welcome to the February 25th Tuesday price review. So getting started, we are looking at the S&P, the Nasdaq, and the Dow, looking at the daily time frame. And as you can see, our draw on liquidity got hit on the S&P, which was this low right here, while the Nasdaq hasn't touched these lows yet, and the Dow returned into this gap, which is what we wanted to see. So our analysis was pretty spot on for the most part. Now, the reasoning behind wanting to see this fair value gap get left open for the Nasdaq and the S&P was because the Dow had created this TPD right here. So as you can see, this would be candle 3. This open is higher than this candle's close. But for the Nasdaq and the S&P, this candle's open is lower than this candle's close. So whenever you have a TPD and there's a gap resting slightly above or slightly below, as you can see right here, the closing of this candle, which would be candle 2, whenever that creates a gap, typically the asset that is stronger to the side that opposes higher time frame narrative is more likely to return into that gap and then continuation, which is what we got to. So you shouldn't have been surprised to see the Dow deliver how it did today. Now, looking solely between the S&P and the Nasdaq for what the market is likely to do next, as you guys can see, the S&P took out this low, while the Nasdaq has yet to take out these lows right here. So this in and of itself is another cracking correlation, but we really need to see how the London session trades. So if the London session expands higher and then forms a bearish setup, that could be something of substance to play in tune with the higher time frame narrative, but it wouldn't be unreasonable to suspect a bullish setup tomorrow. It's just dependent on how the London session trades. Now going to the hourly time frame, as you guys can see right here, we have a daily cycle sequential SMT that formed today between the Nasdaq and the S&P, and then the same candle that created that cracking correlation above this high was a TPD with the Dow, and it was an hourly TPD at the 8 a.m. candle. So after we had that daily cycle sequential SMT and TPD, we can see the market broke lower and the S&P hit our target, while the Dow, as soon as 9:30 opened up, or that 9 a.m. hourly candle, it tried to reach for that daily fair value gap. So something to keep in mind with the Dow is at 9:30, it generally is extremely volatile and can reach for targets that seem like they're way out there. So seeing something like this shouldn't have surprised you, especially at 9:30, seeing it reach up in there. We're trying to reach for that fair value gap due to the fact that it was the stronger asset for the upside, while we wanted to see the Nasdaq and the S&P break lower. But as long as you have a cracking correlation between the S&P and the Nasdaq, especially if that forms first, that can solidify something with the Dow, because I tell you guys, take the Dow with a grain of salt. But if you have one thing tipping its hand between the S&P and the Nasdaq, that second thing is permitted to be between the Dow. And now we're going to look a little bit closer through the lens of the 15-minute time frame. So as you can see, this is the 6 a.m. opening price for the Nasdaq and the S&P. Price trades higher. The S&P creates a failure swing on London session highs, while the Nasdaq runs this high above the true day open for both assets, while the Dow trades higher, taking out London session highs, and then at 9:30 runs higher one more time, trying to reach for that daily fair value gap, and subsequently trading above Q2 of the 90-minute cycles in the morning session. But if we zoom in a little bit further, we can see we have that hourly candle range, just viewing it through the lens of a 15-minute time frame. So this would be 8 a.m. right here. As you guys can see, this is the reversion level right here. So we had that change in the state of delivery form in the second half of the candle, or the end of the candle's lifespan. I might have said a little bit too much right there. This is that 9 a.m. open for the S&P. As you can see, the S&P trades higher and trades into the opening price of that reversion level and then breaks lower, while the Nasdaq only slightly trades into that wick exactly at 9 o'clock and then breaks lower. So this in and of itself is another form of crack in correlation whenever you have one asset trading into the actual body of a reversion level and you have another asset only trading into the wick. Now it's important to only use this cracking correlation on the assets that are most likely to create the failure swings, because as you can see with the Dow, we knew this one would be stronger for upside coming into the day. So that is why it traded above this high right here, forming another Kraken correlation on the 90-minute cycle, and then broke a lower. But hopefully you guys found this one insightful. I will speak with you all in tomorrow's live stream. Good luck and good trading.